Welcome back to another London session on TopstepTV. I see that some people are saying, already sweating in the UK. I'm right there with you. My office is actually south-facing, so when I'm doing these streams, I can't do the air conditioning, so we're in this together, right? It's going to be a hot day in London, in the UK, so we're just going to have to stick with it. The problem with the UK summer is that in August it gets really, really humid. So even though it is warm, it's not raining much, it's bloody hot. All right, with that, let's go into some new features that we have on TopstepX. The big feature that they've just released is the hotkeys. So you would enable the hotkeys by pressing H right on the DOM. Now, I don't know whether that also has, whether it also has that on the order tab. So let me just check that. It does. Okay, so even the order tab has that little H button. So when you press that, you can then go into settings and go into the new tab entitled Hotkeys. From there, you can effectively set the hotkey to listen to whatever you are trying to do. So there's buy market, sell market, reverse position, close position, flatten all, cancel all of the useful orders. Now, for me, I need to slow myself down, so I don't like anything that makes me trade faster and enter positions faster. So for me, this is something that I might use with great caution. And also, I need to remind you, anything new that you're trying out, don't try it out on the accounts that matter, right? Try them out in practice accounts, see whether it works for you. Because obviously it's also a new release. You don't know how things are going to work. So you need to make sure that you test everything in a safe environment before you start smashing hotkeys in your combines and XFAs and live accounts. Okay. So let's move on to some analysis now. Someone is screaming downstairs. All right, so let's focus on copper. Very, very large time frame, weekly chart. This is my charting platform that I like to use. It is AMP Futures MetaTrader 5 that has CQG data behind it. It is something that I'm very used to, and I can just do this very quickly. Obviously, I have some of my custom indicators on there. So all of these indicators that you see, they are from my company called Blatik. So we have Blatik Market Profile, Blatik Supply and Demand, and Blatik DR, which is the daily ranges, average session ranges, a whole bunch of other things, which displays some useful information for me right in this panel, and then this panel, and a few other things. So this enables me to just click a few buttons and to get the information that I need. So the first thing that I'm going to do on copper is to have a look at the volume profile that I've got on this other chart. Again, sorry about the white charts over here. So that trade that I ran yesterday did reach 2-hour target, so that was a nice start to the week. Over here, we have the volume profile. Now, it's pretty bunched up. This is a 4-hour chart, but let's have a look at the weekly just for context. There are some low volume areas of demand that were created as the move was happening yesterday. And for the last 3 weeks, this is a 3-week profile. So what I'm looking at here, I'm not just looking at supply and demand areas. I'm also looking to match up the perceived supply and demand areas with any sort of low volume nodes on the volume profile. So that's what I've got here. Might change the color of the value to be a little bit more obvious. So let me just find that here. It is a very customizable R indicator. You can like literally change everything and anything. So what do I want? I want overall volume. Here we go. Okay, so I'm going to change this value area for the volume to some like really screamy color that I can really see. Was that the right input? That is the question. No, this is the input charts. That's the wrong. Inline charts. No, hold on. God, it's too early for this. You know what? I can't do this right now because I need more caffeine. And as you guys know, I'm not really that cerebral when it comes to utilities in the morning. So I'm just going to leave it. Yeah, so let's have a look at the bigger sort of volume area from those larger time frames. There are some low volume nodes that are pretty obvious on this chart. And if I can match some of the intraday areas with the profile levels and the date type that we might be having, there could be an option for coming up with really good market generated information. So let's drop down to the 30-minute chart. Opening in balance, inside value. This is that trade that I ran yesterday. As you can see, it just about reached 3R, but I did cut it before then. And then it kind of went into a classic sort of overlap sell-off. So right now, this profile and everything that I have on this chart is for the day time frame. So I'm not now looking at the massive picture. I'm just looking at granular intraday levels over the last 3 days. So Friday, Monday, and then today, encompassing all of the sessions. Like, how did we create volume? And where are some of the areas that we might want to see some sell-offs? Now, we already had one sell-off from a low volume area from 405.80. But I typically don't like to get involved that early because sometimes those moves can be fake outs. And I prefer to have a little bit more information before I'm going to put a trade in. I don't trade a lot. Typically, I would trade anywhere from like 3 to about 9 trades per day, but 9 trades more if I'm doing like multiple instruments, if everything's moving, and if I'm sort of moving around different instruments and products. I wouldn't do like 9 or 10 trades on the single instrument because that either means that I'm not reading the market right, or I'm just not finding the opportunities that I want to see. So now we're tagging another area of low volume. I do have some levels further down. And I believe there was an average session range from London. Okay, let's just change this. Now, the first thing that I'm doing is looking for a generalized average session range from London Open all the way to COMEX Open, right? And that particular number will be breached at 399.81. So kind of like just sub that round number. So I quite like that as an area, either for a target or maybe to initiate some new longs. But because we have a day where we're opening in balance, we're opening inside value from yesterday, trying to reverse it. However, on a lot of these days, there's a very high statistical probability then we're going to end up with a failed auction first and foremost, and then maybe even a neutral day type where you have extensions on both sides of that first hour trading range, which is marked as the red box on this chart. So right now, with the way things are, I'm looking, this could be something called a responsive long opportunity. We already tagged the low of this area during Asia, and now we took it out just a little bit, just a tiny little bit, like a few takes out, right? That could be a stop run, and then they might want to reverse it. So I'm also looking at another screen here where I have an even more granular thing with the overnight VWAP and some equity volume candles on a very low time frame to see when some buyers might step in. Another reason why I might want to do a long here is because we're already building structure around the initial balance edge and also through the initial balance. So we already have 3 TPOs printed inside the initial balance. A, B, C, and then D tried to continue the exit from the initial balance but failed. So now we're kind of tagging the initial balance low again. If we get some more weakness there, that will open up a possibility to front run a failed auction trade. I explained the failed auction yesterday, but do let me know if you need me to explain it again. So with that in mind, I am going to try to front run the failed auction with just a one lot. And then if we get that confirmation, I might enter with another lot. So this is front running the failed auction, bit of guesswork based on some, market generated information and statistics. But if I get what I want, then I can add onto this trade. If the market doesn't move like miles away, because since we'll be, effectively doubling up the position, you need to make sure you're sort of in a similar area. But it does need to actually fail the auction. So I'm going to let that do whatever it needs to do. And we can move on to crude oil, actually, because I'm not going to trade it this morning. But we had a 3% rise yesterday. So I do want to take a look at it. Okay, so yesterday, big day. It was a combination of some news that this morning is coming out of the OPEC plus countries. So some of the things that they've said is that OPEC plus cuts are tightening physical markets. For now, supply is struggling to keep pace with peak summer demand. So this could carry on up. I know that yesterday Coach Jay was talking about a possibility for a fade, but crude oil is a little bit tricky, because if you have something going on with the physical side of crude oil, they're not going to care what happened the previous day with technicals, because those are like some new fundamentals coming into the market. So this could carry on higher today, because we've had supply struggling to keep up with the demand. So that's one factor. We've also had that weak growth in China now significantly drags on global gains. Chinese oil demand has contracted for the third consecutive month. Now, why is that important? Is because Chinese oil demand accounts for 15% of the global demand for oil. That's a lot, right? So anytime something is going on with them, we need to kind of take note. So And finally, world oil demand, so just taking a look at the entire earth, it's unchanged. So it didn't really change much. But obviously, we have Middle East tensions as well that could be bringing in a little bit of volatility into the market. Now, whenever I'm going to trade crude oil, I like to see it above 17, but now we're, so there's a crude oil volatility index is called the OVX. So I want to see it at 17. This is now at 35, which should technically open up some pretty nice ranges for us if that kind of stays consistent. Now, obviously, VIX can change at any one point, but there are certain things that we need to take note on when we're trading crude oil. Obviously, it's a slightly different market that doesn't necessarily look at technicals every single time. It's very technical on most days, but when you have those news about the fundamentals, you need to take that into account if you're going to be doing different strategies based on that. But the core approach still remains the same, so we can still look for low volume nodes. It's just that now the fact that the supply is struggling, that increases the global demand for oil. So that means more upside. So now you have the direction of the trade. And the rest of the technicals should try and aim to support that, or to completely invalidate it as well. You know, in some days the focus of crude oil is just going to evaporate. And right now we're still pushing higher on crude oil. And I said I wasn't going to trade it, but I don't know, maybe this it is dragging me in. It's a very small range right now. So we have a tiny initial balance of 31, of actually 22 ticks, and then with the extensions we're coming up to 31. So I might wait and go back to copper, because copper tends to move really well during this time. But I just wanted to point this out for anyone trading crude oil. We might have some life coming back into my favorite product. But I've been waiting for better conditions for crude oil to step in. Okay, it looks like we do have that failed auction now, or at least the beginnings of the failed auction. So I'm going to add onto this trade. So now I'm in with 2 lots, average price 403.40. And I'm aiming for the rotation through to the initial balance, and then to see what's going on around the IB high, initial balance high. All right, so let's see what is going on in equities. Okay, so let's have a look at everyone's favorite product, the NQ Nasdaq. Looking at a 4-hour chart, it's trying to tag this low volume node and the previous week's low. So that used to be a demand there. Now it isn't, but it left the area of like thin volume, thin liquidity. So sometimes you can see very nice movement from there. And yesterday there was a pretty good movement from the edge of that area. Almost immediately went into a sell-off, and that was pretty much the main move of the day. After that, I saw that it went into a fade, pretty aggressive fade. And now we're back here. So, you know, you can make an argument that they're trying to break through it, but until they kind of populate this area with some more volume, there is still opportunities for shorts from this. I suppose it's a supply. So in that regard, you want to maybe focus on looking for shorts in equities today. I might be doing a short DAX because I see the DAX is kind of following similar moves, and it went into a value acceptance, but I wanted it to come back Actually, let's have a look at DAX. And again, I know we don't have it yet in Topstep, but it is a pretty nice product. So opened above Asia, inside yesterday's London range, and then tried to reject the value high from London yesterday, but then fell into it. Now, it fell into it pretty deep. Whenever that happens, I want to see a return either to the initial balance low or to value high from the inside. That is the only time I would use those sorts of areas from the inside of the day. And at all other times, I want to see it outside of value. Okay, it turned around at the start, right at London supply from yesterday. We also had a supply from like a number of days ago, weeks ago, that is also creating that low volume area. So all equities look very, very similar. Now, if we do start to fall down, there is the first area of target, I suppose, at 17779. If it continues to fall, we have some low volume areas lower down from 17718. So yeah, that is definitely a possibility. So I may have a short developing in DAX. And does NQ follow suit? Let me see what the size of the initial balance actually was. 77 handles. Yeah, I mean, it's decent. But right now we're just a third of the range that we've been doing for London last week. And last week was an outlier. You know, it wasn't a normal week. So this is more in line with what I would expect to see from NASDAQ for London. So yeah, some low volume areas, again, causing that sell-off. If it goes into a sustained auction, so if it closes this candle below the initial balance low, there's a possibility for a little gap fill that has about 50, let's say 50 handles in it until it reaches the next area of interest, which is the London value high. At that point, things become a little bit murky because you have a lot of volume here, so it becomes difficult to read. And then really nothing that interesting until you fall all the way down to 178.46, and then further down, even thinner area of demand at 176.32. So that's something to put on your charts. But again, it's not a signal service. It's just interesting areas of interest that we might want to take a look at. Don't take this as, oh, Dee says there's a demand at 178.54. Let's all go long. This is not the point. Because the problem with the low volume nodes is that the price can run through them, or it can bounce from them. So we don't know what's going to happen. Anything can happen. Sometimes the price goes through the other side of it and then reverses. That's also a possibility. But none of it is, you know, oh, we're sure, 100% sure that the market is going to turn around here. So there's not a single signal service. It's all educational. We do have the disclaimer at the bottom of this video. Is the initial balance the open of the day's candle? No, the initial balance is always the open of the regular trading hours. So whatever session you're trading, it is the first hour of that session. For London, my time, so I'm in London, it's 8 o'clock in the morning until 9 o'clock in the morning. For something like NQ, that's the same thing for London, but it changes for the open of the cash session in New York. That starts my time 2:30 p.m. and goes all the way till 3:30 p.m. If you're trading copper typically will trade on COMEX hours, so London remains the same, but the initial balance for COMEX is an hour earlier than the cash session for equities. So it will start at 1:30 p.m. my time and go on until 2:30 p.m. And then after that, you look for extensions of that and you gauge how the auction is doing based on, you know, how strong the move is, how weak the move is, are we coming back into initial balance, and all of that good stuff. Martin Bukovic says, what info should we follow for better DAX trading? For example, some people who trade NQ and ES follow Magnificent 7 or indices. Thanks in advance. So I actually reference ES levels even when I'm doing DAX. So rather than looking at it as a singular thing, it tends to have a little bit of a move, a little bit of a mind of its own. But for the most part, ES and DAX will have some similarities in it, especially on larger time frames. So let me drag out an ES chart. And by the way, guys, if you like what I'm talking about here, click that like button. It helps me out a lot. And if you're not subscribed yet and you just randomly stumbled onto this video, subscribe to Topstep. It's a really good TV network for futures traders. We have a lot of content, and the main broadcast that starts at 2 p.m. my time and 8 a.m. Central Time, because they are all based mainly in Chicago. ES, where is it? Here we go. Okay, ES. I'm going to move copper out of the way. It's doing okay for now, so no drama there. 4 hour on DAX, 4 hour on ES. Let me drag down this ES chart a little bit lower. Let's do more. There we go. Okay, so now when I compare the two, you can see that the 4 hour candles are pretty similar, right? So if we go from this one, it effectively follows along in not exactly by a factor of 1, but it's pretty similar, right? You can even say that when London opens, they start to correlate even better. I'm just gonna clear my throat again. Morning. So yeah, as soon as London session starts, you start to see even more correlation in how the candles are behaving. And it's very useful to try and match the levels that you see on ES in the same way. Just ignore this. This was me doing some research. And then to try and match those same similar areas in DAX. When it comes to the intraday time frames, though, I might look at both, but I will take the signals during London for DAX. DAX actually moves pretty well for the cash session in New York, and it's not crazy at all, but it still has about, 140 ticks inside it, which is pretty awesome. And DAX is one of those products where on a lot of the days you can really size up on it if it's the right type of a day. It also follows some nice statistics, like, for example, if you get a really nice run of like consecutive green candles or consecutive red candles, after a while you can actually do a fade of that when the statistical consecutive bars have been exhausted sufficiently. And there are tools that can help you to figure out what that number actually is on a 15-minute chart, 30-minute chart, 5-minute chart, and so on and so forth. But the idea is, for example, we have the low volume area on ES here. This is 4 hour chart. And we have the low volume area on DAX here. So what did they both do? They tagged it yesterday and sold off from it. Yeah? Very, very similar. Might be something to put into your weekly plans, right? So we now have Nick for a Tick doing our Globex kickoff on Sundays, and you can take some cues from how he does it, right? So he likes to plot all of these areas, and it's something that a lot of us look at. So it's a very useful correlating tool, especially on larger time frames. And now if you go a little bit more granular, because London is the main session for DAX, but it isn't the main session for ES, I tend to take the signals from DAX profile rather than looking at the levels of ES and then expecting that to hit. So might have missed my entry there. That's great. So whenever I miss an entry like this because I'm talking, I either wait for a slightly better price, or I will take it at like 1 hour. So I have to minimize my expectations for the trade. But yeah, I was talking there, wasn't I? Right, so see, sometimes this happens on the streams because you are obviously very engrossed in like other markets, you're answering questions, and then your setup comes along and you're like, la la la, and then it's gone. It's like that South Park meme, and it's gone. Right. So yeah, now if I see DAX value area, which was located at 178.48, and value low was 177.82, the price tried to go higher from there, but then ultimately accepted the value, opening up the potential for a special situation value acceptance play that has a target of at least the other side of value, but a lot of the time, statistically, from what I've seen, it tends to overshoot value, so fading moves from the value low is not a terribly high statistical strategy on this particular product. It's a little bit higher probabilistically on gold, because gold tends to use the value highs, value lows more as support resistance. However, on a lot of the days, that is not how we use the value area. So for now, the only thing that I have here is to try and run this down to 32 points. So I am in on my other account, my company. I suppose it's a private account, but it's a company account. It's not just mine. All right, let's have a look at questions. Yes, and Martin, also one thing to keep an eye on is the DAX VIX. Let's not forget about that. So VDAX, DAX New Volatility Index. I like this to be ideally over 15, but closer to 20 would be really good. Anything below that, don't expect to have too many days with massive volatility. So we have to adjust our strategies based on the volatility index. And that's something that I'm always looking at, because since COVID, we've had some mad volatility. And we didn't really, at that time, I didn't really notice that the VIX too much, because it was just like crude oil moves 280 ticks on average, and that's been for years, years and years. And then suddenly everything went absolutely nuts during COVID and started to go into these days of 600, 700, 1,000 ticks in a day, which is insanity for crude oil. And then futures went negative, and then they suspended trading for a number of weeks. So since then, I have been keeping an eye on that oil volatility index. And it's kind of helped me to stay out of the market when the conditions are not looking great. So for a long time, we were actually sitting down around like 12 and 10, which is like nothing. Ooh, I got hit on that copper trade. Okay, so That's minus 493. So now we wait. There's nothing for me to do. So copper now did a fake out. This is what I'm talking about, low volume nodes. So they can be either or. So they can be good bounce areas, but sometimes price decides that actually we're going to run through that. So now there's another trade potentially down to my next area of interest, which is closer to the round number at 4 evens. But I need a good level here because right now this could be a little bit jumpy. I'm a little bit reticent to jump into a short here as a momentum because we did have an inside day that on the first try failed to go lower. So this could be another stop run. So yeah, I'm gonna chill on that for a bit. And I have this DAX trade now that I'm going to be babysitting. I did enter it at 178.18 because it looks a little bit better for shorts because it's a value acceptance. So that's my entry roughly, 178.18. Probably aiming for 1.5 R, which is roughly about 36 ticks for that completion of the value acceptance. So that is, if you trade DAX, that might be interesting. ATG says, Dee, can you talk a little about your trade entry rules? So my trade entry rules revolve around a good intraday level that is market generated. So rather than just jumping in randomly, I need to either have an initial balance somewhere, single prints or a low volume node, or I need to have like VWAP or standard deviation bands. Like I tend to have a number of tools of how to enter a trade based on whatever is happening in front of me. Sometimes it will be a mean reversion trade, other times it would be a momentum type trade. So the first thing that I do is to break down my trade setups into, let's say, 4 different categories. And I am going to bring out a little Word document. So, what sort of a setup is it? So here's a momentum setup. And then there's subsets of momentums. There's a sustained auction, which can actually have 2 entries. I can either have a break of the initial balance high, which is a little bit risky because a lot of those breaks tend to fail on the first attempt, like we've seen in copper, right? And then if you do have a sustained auction, it will show up at some point later on, either as a lower low, higher high, and anything that makes sense. But you can also have value acceptance, which is what I'm doing in DAX. So that's also a momentum type setup. You can also have the auction fade when the market moves away from the initial balance and then trends for a while, but then sort of runs out of steam, starts coming back, and then turns around. So that's one. Now the second type of a trade is a mean reversion. Mean reversion can be either some distance from VWAP, and then I like to use my own Market Stalker's method helpers, like average session range. Sometimes I even partial the session range just to give me the range of the last previous 10 days for the 90 minutes that I'm trying to trade. Like, for example, for London, that would roughly be from 9:30 a.m. up until 11 o'clock, and then I want to see how much the market has moved. And if we're sort of in the ballpark at that level, but away from VWAP, that will be one thing. That would be one trade setup. So it can be mean reversion from ADR, ASR, depends on whether I'm using the daily range or the session ranges. Both can come into play. Then mean reversion can also be from second or third standard deviation bands back to VWAP or something similar, but that's generally the type of a setup that I'm looking for. The third type would be the neutral day type strategies. Now, again, for those where you can have a couple of options, you can have a neutral day type with the extensions on both sides of the initial balance, but you can also have quieter days that are also range bound that have the extension of the initial balance only to one side. So, for example, we can have, and these are called typically responsive activity setups. So neutral day type 1 would be IB extensions both sides. So initial balance breaks to both sides, and then you're effectively trying to fade whichever session high or session low gets reached first. You can also have a ranging day strategy where the market, let's say we had a CPI or PPI or something crazy. And then you have a very, very big reaction to that. But then after that, you get a new range that gets established. That's also a ranging strategy, sort of like responsive activity after the fact. And then you can use the Dolby style range trading. So you identify that new range and then you just basically ping setups until one side of it breaks. So that would be like, there's more, but I don't want to, overwhelm you too much. But that is basically the primary thing that I would look for. What sort of a playbook am I doing, right? After I have that, I have little orientation points intraday that I will use as entry. So for that copper trade that didn't work this time around, it was the initial balance low. Are we above it? Are we below it? And, nothing is foolproof. Again, nothing is 100%. You will lose trades. As long as those losses are contained, the probability of the setups that you're taking will show up over time. Like I said in one of the previous sessions, just like dieting. If you just diet and exercise like a lunatic for one day, that's not going to make one blind bit of difference for your body and your state of energy and how you feel and your health if you only do it for one day. But you keep doing it, and over time, whatever you've been doing shows up as results on your body, the health, blood markers and all of that. So that's what we want from trading as well, to recognize the times when we should maybe scale back on the number of trades that we're doing, and then also recognize the time when the opportunities are plentiful. And this sort of breakdown of what sort of a setup you're looking for in light of current market state can actually help you with that first thing. So then the second step would be to find an orientation level. Now I've got a few of those where we have initial balance edges, we have value area outer edges. This is the way I like to trade. Then ASR, ADI, low, high. We also have low volume nodes and supply demand areas on larger time frames if we're somewhere near them. So that would probably be a nice sort of compression of the orientation levels. Then once I have that, we go down to the third step, which is a timing tool. Now, this is not always necessary. Timing tool for me can be either bookmap, so actual real-time order flow, with the actual order blocks that I can see there. But it can also be 1 minute chart with some very simple 9 EMAs and equivolume candles. So that in conjunction with bookmap can sometimes give you some really, really good views of what is happening at the level, but it's not for everyone. And in fact, I did a whole YouTube video on my own channel, Market Stalker D, about use of bookmap and how it can actually be very detrimental for some people. So again, this is not any kind of advice on what you should be doing. I'm just telling you what I do. And if you can derive some educational things from it, all the better. We're here to share our experiences, but not to act as a signal service. So we can only talk about the stuff that's worked for us. And this is roughly my process. So ideally for the 1 minute 9 EMA, I will again have granular couple of setups that I want to look for depending on what we're doing with the other things. So it's all just market generated information, right? A lot of this is not like, oh, I have RSI crossing over the oversold and overbought levels. I have the MACD divergence. It's not like that. It's a completely different way of looking at the markets and focusing on price action as your guide, and then trying to just go a little bit more granular through to the micro order flow so you can make maybe better decisions as the market is approaching a level of interest. And that's why anytime you hear all of us here, Hogue, Nick for a Tick, Dakota, we're never going, oh, I want to go long here. We're always like, let's see what happens here. So if we reject, then we do this. If we go through the level, then we do this. It's never like coming to trade with a bias. It's keeping your mind open to both sides of the story, having the orientation areas, and then just looking at how the price acts around it. And it sounds easy, but it's something that actually takes many years to develop. I call it situational awareness, where you have all of this data that for a novice can be quite overwhelming. But I think most of us who are on TopstepTV, we have at least anywhere from like 10 years trading experience all the way up to like 30 years, 40 years like Hogue. But most of us here, I've been trading for 16 years and 11 years out of that I've been dealing with prop firms. So it's a lot of screen time, and the strategies that you might see me do pretty kind of seamlessly on some of the days, it might not be something that you're ready for, because you're still sort of at this point where you've just identified a mean reversion trade and you're like super happy about it. But in general, as time goes by, we all become like sort of like a mishmash of things that we tried, tested, whether in a live environment, demo, combines, or just purely from a rough sort of functionality back test, and then try to do it in live markets. So we keep what works for us and what makes sense to you in particular, and we discard things that we're not connecting with. So over time, you start to sort of blend into your own style. Whatever you hear on TopstepTV, whatever you hear about strategies, wherever you pick them up from, you would have tried them out like almost immediately. You hear about a new strategy, if you're anything like me, and you're like super excited, like I need to test this out. And I'm a total nerd when it comes to that. So for me, it's like one of those things. It's like, let's see if there's merit in this. And then I usually spend an entire weekend just testing things out, running some counting algorithms that I usually have. And actually, in recent years, this year I started using a little bit of a help of ChatGPT to just kind of save me time. But back in the day, like a few years ago, I used to do it by myself. Like I used to actually write these utility counting algorithms that would give me the stats on how many times certain things are happening. And today we have things like Edgeful, we have, ChatGPT, we have a whole bunch of stuff that can help us with that. But yeah, frequently I will be turning to statistics and data as my sort of comfort area. But everything starts with setting the structure for the day. So the more ways that you have to set that structure, either from top-down approach and then going granularly into the day time frame, the less you're going to have moments where you're like, why did that happen? Oh my God. Like yesterday, to me, looking at the equities, it was perfectly clear what was happening, right? Perfectly clear. It was like we reached the low volume node, struggled, reversed from it. Sorry, there was this reverse from it, then ran out of steam. It was Monday, and then we just barcoded for the rest of the time. There was a good fade opportunity that I didn't take, but I did take this in ES actually on a couple of combines that I'm working on for New York. And that was a smashing trade. Like that accounted for most of the profits on the day. And then, I missed that. And then I saw doing this. So I then set some alerts on Ninja to tell me when we sort of break out of this range or we climb back up to this area. It never got reached until like this morning. So to me, that was like a pretty obvious day of what should happen. And then eventually went into a very nice failed auction. So, to me, that's not confusing at all. It's just like, it's Monday. We reached the most obvious area. We did a failed auction from it. The end. Sometimes if you get the lower probability days where they smash the initial bounce to the other side, you can fade that as well, as long as the move is not super extended and it just goes a million miles past the other side of the initial bounce. But there's, good opportunities. However, yesterday, like I said, I'm like, I don't want to trade this range. I can't be bothered with ranges after I did such a nice big trade. So I went and did something else. I actually jet washed my entire garden. I did some painting of the walls, not art. I draw stick figures. So yeah, but the whole point of the process that you yourself can develop is to have some sort of a way of coming up with a framework that you're going to track over time. And the plan that you're creating and that framework that you're creating is not about, it has to be foolproof. No, it's going to have mistakes in it. But the object of running a plan is to see what works, what doesn't work, and then to systematically keep the stuff that keeps working on most days and discard the stuff that isn't working. And then eventually over time, your skills will increase. So obviously, if you're doing 40 trades per day, there is no chance in hell that you're going to be able to do this efficiently. Take a look at the top traders that we have, right? Most people don't do more than about 3 to 5 trades per day. And 5 trades is like when they're trading multiple things. So, on a lot of the days, if you find 1 or 2 good setups that go to full target, you're done. You're done. And here's something that I have shown before. This is like a little day trader post-mortem process. So once you've set your plan and the day is done, you've done whatever you've done in the day, either did well or traded a bit muppety, here is how you can track all of that. So I use Edgewonk for my statistics, but obviously we now have stats in topstepx as well. Well, you can start with whether your intraday plan scenarios were actually accurate. Like, were you right on the day? Yes, you were right, you made money. That's great, but you still need to go a little bit more granular. Why did it work? What was the setup? What was the level? What was the stop loss that you used? What was the number of ticks that you took out of that trade? Was it a positive R multiples? Was it a negative R multiples? What time of the day did you trade? That's like one thing that people forget about. They're like, I don't know. It's just, traded. But the time of day is really, really important, okay? A lot of the markets that we trade have underlying mechanics in it. And it's one of those things where if you know the time of day when your trades are initiated, you can avoid all the other nonsense that you were doing before that time of day. Like, for example, we have the Euro close for equities that actually brings reversals into the lunchtime hour very frequently. So that's the time of day when, for example, most of my equity setups work out. And I even trade DAX for that time. I trade post-Euro close. And then after the lunchtime hour, I also have some other setups that involve looking at fading some of the moves that we've done, and then into power hour is when I really trade ES quite a lot. Like on most of the days, I will do at least one ES trade for power hour. But here's where the problem starts. If you were correct on the intraday plans, but you didn't really stick to the plan and you lost money, identify why you lost money. Did you follow your levels? Did you follow the directions, or did you get lost in the heat of the moment? Was your stop loss too small? You know, a lot of people try and use like 10, 15, 20 handles on NQ, and they get absolutely run over. You're not going to last like 3 seconds, especially not if you're not very good at identifying areas with quite some accuracy, right? So, you know, were you too early in the setup? Were you just front running things like I was front running my copper trade, then got run over? That needs to go into a journal. And then if the scenarios were not accurate, you were wrong, you made money, that's probably the worst thing. So when you completely misbehave, you break all of your rules and you still make money. That's the way to create bad trading habits, because your brain learns that that's what worked last time. So experientially, because it's all about experiential learning, experientially you're like, hey, that worked last time. Why don't I misbehave today as well and see whether I can make money? And what happens? The next time you do that, you were wrong, you lost money. So you keep bouncing between those two. Well, again, ask yourself, did you follow the plan? Or did you change it intra-session? Why did you end up making money when your plan was wrong, if the plan was wrong, right? Did you move or remove your stop loss? Did you modify the original targets? Like some people have a perfectly good 2-hour multiples target. They're like, I want more. Like, great. You want more. But 2-hour target intraday is actually pretty good. And on NQ, even something like 3-hour is very, very normal. I like to use slightly wider targets unless I can find market structure to limit risk as the price action is developing. So I usually start on 35 handles, which I then move to about 15 handles if I get the move that I want. But the reason why I start with like a disaster stop loss is so that it allows me time to get out of a trade if it's wrong, if I have time, right? And you're not going to do that with tiny little stop losses. So again, I rely on that situational awareness to go, that's what I was looking to see, versus, no, it didn't do what I wanted, I'm bailing. So, you know, I very rarely kind of hit full R. Minus 1 hour. Now, even on this copper trade, I usually like to use probably about 25, 30 ticks, but I have a set risk in topstepx for half of that amount, like for only like 14 ticks or something. It's a fraction of it. So normally, and I do that also because I'm talking, and a lot of the times I will forget that I have a trade on. So yeah, it just kind of prevents the downside. So if you were wrong and you lost money, which would be the most likely outcome on a lot of the days with enough sample size, identify the false assumptions that were just plain wrong in your plan. So for example, if you were constantly looking to go long off a VWAP on a neutral day type, that's probably not the best choice, because if you've seen yesterday, we ran through VWAP like it was nothing. Why? Because it was ultimately a range-bound day. That's why. And on those types of days, VWAP acts better as a target than as any kind of a starting point. But if you're in a momentum trade and you can overlap VWAP with something else, like a low volume node or something, just take it. It's great. But that all needs to be a part of your plan, right? So see if you missed some extra information. Profile, distribution curve, average ranges. Obviously, I'm using my terminology here. This is for my traders. This is what we try and set up in the Market Stalkers method, and then you just track statistics. So that's pretty much it. All right, let's go through questions again. So one last question. Was there one last question? I thought there was. I just lost it. Hold on. Vince J says, good morning, Dee. I'm trying to practice and perfect trading failed auctions. Would you say that ES is a good example of failed auction yesterday? Yes. So yesterday, this is a bit of a jumpy failed auction because it fell too far into the initial balance. But yeah, this would be a great example of it. Let me increase the chart and maybe switch off my backtest mode. No, actually, I'll switch on the backtest mode. Go back to yesterday. So this one actually popped outside, gave a fake out, that it's holding up. But remember that we had that big low volume node area yesterday. So that's what I was looking at. And then it fell all in one go. Like, this is actually a little bit difficult to catch if you weren't staring at lower time frames, so maybe not that ideal. But it created a bearish engulfing after falling into the initial balance, right? And then it kind of bounced back. But that's generally what you want to see. Let me see if I can find another better version. This was an auction failed. Okay, here we go. Here's a partial failed auction because we had a pretty sizable initial balance. So what was that? That was 5th of August. So the price, again, tries to go outside of the initial balance. Perfectly fine. You know, it attempts to actually leave the initial balance, and it's, you know, it looks like it's successful, but I'm always a little bit suspicious whenever this happens. So I like to see, if I'm not already in a momentum trade upside, I prefer to see single prints left behind. So I would kind of sit and wait. I like to have a lot of information before I do my trade. Otherwise, it doesn't always end well. And then it turns around and goes all the way back into the initial balance, closing the 30-minute candle inside it. Then retests near the initial balance low. So this is what I normally like to see if I'm going to get involved in a late failed auction. So if I wasn't in, I see all this happening, I come to the desk and I'm like, okay, now I need a pullback. And it does so, and then gives us yet another fall of like 47 handles. It's crazy. So that was a good opportunity to run a partial failed auction down to the first area of sort of demand, where we stuttered a little bit. But then also, if you look on the volume profile, not only do we have a demand here, so stutter demand, there it is, we also have the low volume nodes. So however you want to look at this information, it's actually the same information, but might be a little bit easier to see on the volume profile. And then for some people, it might be easy to see that there was a demand there. So just, you know, same information, different packaging. All right, guys, let's end this now. So just one more question that I saw here. You will lose, just lose less than you make, risk 1 to make 4. Okay, so 4-to-1 risk reward intraday. That's a ludicrously high risk reward. Okay, so those sorts of trades will probably come with pretty low accuracy, and to me, it's a very difficult way to live. Why? Because you come to trade, you get smacked in the face. You come to trade, you get smacked in the face. You come to trade, you get smacked in the face. On the 4th day, you come to trade and you get your 4-to-1. Yay! So those opportunities for momentum trades that can bring you 4R multiples on the intraday level are actually pretty rare. So that's when you're going to be floating around 30 to 40% accuracy, which is not great. I like to use 2R multiples, maybe 3 if we're in a really nice trending move, maybe 3. And don't forget that when you are doing that, you're effectively making, 300% on whatever you risked. So let's put that in percentages, right? You're risking 100, you get 300. Okay? So to me, 4R is ludicrously high, but 2R and 1.5R are also statistically viable and can be found on range-bound days as well. So you don't always have to just be blinkers on, 4R, do or die, or nothing. There are times when that might be useful if you're over-managing your trades and you need to just chill. So then you just let the trade play out. But 2R at like moderate accuracy of about 43 to 50%. And even if you have accuracy of 37% on 2R, you will still be profitable. However, again, psychologically very difficult to live through. So I try to be moderate risk reward with moderate accuracy. So I usually float anywhere from 47 to 53% when you look at very large sample sizes. And my risk reward floats from about 1.7 to 2.3 R. So, that's something that works over very, very long periods of time. It has a relatively low risk of ruin, meaning that you won't necessarily blow an account in 3.5 seconds. All right, so that is it for real now. So let's finish up this session. And yeah, I will see you again tomorrow. Don't forget, we have fast markets today. And we have some other great segments coming up. I do have a little bit of an update about the Thursday, the captain visit. So we're actually planning something for after Labor Day. So he's not going to be coming on this week, but we'll be working to get him on as a guest at some point after Labor Day. With that said, yeah, enjoy the rest of the programming. Don't forget, we've got some new programming. We've got Dakota still, obviously, doing his slow markets from 7:30 p.m. every evening. We have Coach Jay at the buzzer, recap of the day's moves. That starts at 3:15 p.m. Central, goes on for an hour. And then finally, we have Nick for a Tick, starting his new segment of Globex Open on Sundays. I believe that is at 4:45 p.m. Central. So very late for me, but I was in bed on Sunday and I was there for Nick. All right, guys, that is it for me. Make sure to click like, click subscribe. I will see you again tomorrow for another London session. Take care.